Stop everything. Right now, the market has frozen, and silver, a commodity that has quietly underpinned wealth for centuries, is no longer trading. Prices gap up so fast it seems impossible, and ordinary investors are left staring at screens, watching opportunity and risk collide in real time. This is not a glitch. This is the result of a deliberate, secret government strategy designed to manipulate markets, control liquidity, and safeguard national financial priorities. And very few people outside of the inner circles even know it exists. The moment is tense, cinematic, and real, and the stakes are higher than most citizens realize. You see, silver, like gold before it, is more than just an industrial metal. It is a store of value, a hedge against inflation, and a critical asset in the calculation of national debt and wealth. When trading halts, it's not random chaos. It's a squeeze engineered by regulatory authorities to force exposure, liquidate risk, and test market resilience. Imagine a room full of investors playing musical chairs. The music is blasting, the stakes are skyrocketing, and suddenly the floor drops out beneath dozens of participants. The few who knew the rules, the insiders, are already seated safely. The rest are scrambling, panicking, and losing real money. To understand why this happens, you need to understand the broader financial machinery. The U.S. national debt is not just a number, it is a pressure cooker, constantly building and threatening systemic instability. Governments have historically relied on commodity controls and currency adjustments to relieve this pressure. Think back to 1933, when gold was forcibly seized and revalued. Citizens were suddenly required to exchange their private gold holdings for government-backed currency at a fraction of the metal's true market value. The lesson was clear. When crises reach a tipping point, governments can and do intervene decisively, and often secretly. Fast forward to today. The rise of digital currencies, fractional reserves, and algorithmic trading has created an invisible web connecting commodities, equities, and public wealth. Silver trading halts are not just about the metal, they are a testing ground for broader economic strategies. Step by step, the mechanism works like this. First, leverage builds. Suppose open silver contracts exceed available ounces by 50%, with traders speculating on margin. Second, a regulatory announcement triggers a halt in trading or a restriction on positions. Third, the squeeze occurs. Prices gap, liquidations cascade, and ordinary investors are trapped. The result: extreme volatility that enriches insiders and reduces exposure risk for financial institutions, all under the guise of market stability. Mathematical clarity makes this terrifyingly simple. Imagine there are 100,000 ounces of silver available in the market. Open contracts, however, total 150,000 ounces. A sudden rule change freezes trading. Demand instantly exceeds supply. Prices spike exponentially, and margin calls hit traders like a tsunami. Those who bought late, holding leveraged positions, are forced to liquidate at extreme losses. Every second counts. Every hesitation costs tens of thousands. This is not theoretical. It is happening now. Ordinary investors, retirees, and savers are the most vulnerable, while the system ensures that the government and financial institutions retain control. The squeeze is only one layer. Underneath, hidden mechanisms are at play. Executive orders, regulatory frameworks, and secretive digital currency preparations. Governments have been quietly designing structures where wealth can be preserved or redistributed during moments of crisis. Digital currencies, when linked to commodities or national assets, can be recalibrated almost instantaneously, adjusting individual balances, altering liquidity, or freezing accounts without warning. The system is like a trap door. If you're not prepared, you fall. If you understand the triggers, you survive. History offers plenty of precedents. In the 1970s, gold was revalued multiple times, catching investors and governments in a delicate balance. Flash crashes in modern markets, often blamed on technical glitches, are frequently engineered events, stress testing liquidity, and market reactions. Regulatory pauses, margin adjustments, and sudden asset freezes are the new normal. What looks like chaos is actually a controlled environment to evaluate risk and ensure systemic survival. Every halted trade, every price spike is calculated. Ordinary citizens, however, are left exposed. Retirees with silver-backed ETFs, savers with commodity-linked portfolios, and small traders watching their screens in panic are not just spectators, they are collateral. The urgency cannot be overstated. Missing these windows can mean permanent losses. This is why financial awareness is now survival. You must understand margin, leverage, liquidity, and regulatory power. You must track commodities and be ready to act within hours, sometimes minutes. Delay is not just costly, it's fatal. The implications are staggering. Governments are balancing national debt crises with hidden monetary strategies, while everyday citizens unknowingly participate in a system where their wealth can be suddenly frozen or devalued. Silver, gold, and emerging digital currencies are all part of this carefully orchestrated web. Each policy, each executive order, each algorithmic adjustment is a move in a complex chess game, and only those who understand the rules are safe. Ordinary investors are pawns, and the timeline for action is relentless and unforgiving. Consider this. A new silver squeeze could be the opening act of a larger strategy, preparing markets for gold revaluation or the introduction of government-backed digital currencies. In such a scenario, every unprepared investor could face forced liquidations, frozen accounts, or wealth erosion, while the government recalibrates assets behind the scenes. The system is designed to protect the economy at large, but often at the expense of individual savers. Timing, insight, and decisiveness are everything. This is the hidden financial battlefield that the media rarely covers. Every spike, every gap, every trading halt is a message. The game has changed. Ordinary citizens can no longer afford ignorance. Knowledge is the only defense. Understanding how regulatory pauses work, how margin calls operate, and how leverage amplifies risk is no longer optional. It is a prerequisite for survival. Historical context shows that these interventions are deliberate and inevitable, not random. Ignoring them is like ignoring a storm while standing in the open sea. Ultimately, the silver squeeze is a warning, a cinematic moment in real life, and a test of awareness. Every halted trade, every gapped price, is a reminder that wealth is fragile and control is often invisible. Ordinary investors must act decisively, diversify wisely, and monitor every regulatory shift. Digital currencies, gold revaluations, and commodity squeezes are no longer hypothetical. They are unfolding now, silently, but with profound consequences. The lesson is clear. The financial world is a high-stakes game of trapdoors, musical chairs, and constricting timelines. Ordinary citizens must be vigilant, informed, and ready to act. The window is narrow, and hesitation is costly. Government strategies are hidden, complex, and precise. Wealth preservation depends on awareness, speed, and decisive action. This is not speculation, it is reality unfolding before your eyes, with the silver squeeze serving as both warning and wake-up call. Understand it, prepare for it, survive it. Stop what you're doing and pay attention. Silver, the metal that has quietly held wealth for centuries, has suddenly spiked, and trading has been abruptly halted. Prices are surging beyond reason. Panic is spreading like wildfire across trading floors, and ordinary investors are left frozen, staring at their screens, while a carefully orchestrated financial storm rages behind the scenes. This is not random market chaos. What you're witnessing is a secret government strategy in motion, a precise high-stakes manipulation designed to control liquidity, test systemic resilience, and shift wealth in ways most people can't even imagine. Silver isn't just a commodity, it is a financial anchor, a hedge against inflation, and a critical part of the hidden infrastructure of national wealth. When trading stops and prices gap upward, it's like the floor collapsing under thousands of players in a high-stakes game of musical chairs. The insiders already have seats, prepared for the panic that will inevitably follow. Ordinary investors, retirees, savers, small traders are left scrambling, often losing tens of thousands within minutes. The squeeze is engineered through a combination of margin leverage, regulatory pauses, and algorithmic interventions that most traders cannot anticipate. To understand the mechanics, consider this step by step. Suppose the market has 100,000 ounces of silver available, yet open contracts total 150,000 ounces because of leveraged trading. A sudden rule change or regulatory announcement halts trading. Demand instantly exceeds supply, prices spike exponentially, and margin calls hit like a tidal wave. Every investor caught on the wrong side is forced to liquidate at a loss, while the few who anticipated the squeeze profit. This is not theory. It's a mathematical certainty when leverage and scarcity collide, and it's happening right now, in real time. History offers chilling parallels. In 1933, the U.S. government seized gold and revalued it overnight, forcing citizens to exchange private holdings for government-backed currency at a fraction of the true market value. The lesson is clear. When financial crises reach a tipping point, authorities intervene decisively, often without warning. Today, the same strategies are being executed with silver, digital currencies, and algorithmic frameworks, creating a hidden web that connects commodities, debt, and national monetary policy. Every gap, halt, or squeeze is part of a larger plan, an active test of the system, and a recalibration of risk. The implications for ordinary citizens are immediate and severe. Retirement accounts, commodity-linked portfolios, and even personal savings are vulnerable. Digital currency frameworks being quietly prepared could recalibrate balances instantly, while new executive orders allow regulators to freeze or redirect liquidity with little notice. In this environment, ignorance is not bliss, it's financial peril. Investors must understand leverage, monitor commodity markets, and recognize regulatory triggers because opportunities to act appear in hours, sometimes minutes, and hesitation can cost everything. The silver squeeze is a warning, a cinematic real-life event that underscores the fragile, high-stakes nature of modern finance. Every halted trade, every gapped price, every panic-driven liquidation is a signal. The game has changed. Ordinary investors are no longer spectators. They are pawns in a system designed to preserve national stability while testing the limits of individual preparedness. Knowledge, vigilance, and decisive action are the only defenses. The financial trapdoors are real, the timelines are constricting, and the stakes are higher than they have ever been. Act quickly, understand the hidden rules, and secure your position before the next wave of engineered volatility hits.